a lot of money lost. So we can see the risk in this company, but when we look at the 5-year, we can see there's a sort of an upward trend, but we can see right here there seemed to be kind of like a bubble, and then the bubble bursted right here, and then we're kind of back into bubble territory. So maybe right now it's a little overvalued, I would say, just by looking at it at a glance. Now when we look at the volume, we could see the volume is at 6 million, but the average volume is 11 million. So the average volume is much higher than what it is right now. We look at the highs, we could see that we're pretty close to our highs. Actually, we're not that close to our highs. The highs, we still got a bit of way to go to the 52-week high. And when it comes to the lows, we're also kind of far away from the lows, so we're kind of in the middle point right now. Netflix is a pretty rich company with 152 billion market cap, high PE ratio of 134, and Netflix doesn't offer no dividends, which sucks. So the sucky thing about Netflix is it offers no dividends. We look at the news, we can see the news. There's not much going on when it comes to Netflix in the short term that will necessarily affect the price in a major way as of right now. Netflix is pretty much the news that has occurred about Netflix is pretty much similar that it's always been. Netflix has always been good at blowing money, and that's pretty much what the news of Netflix has always pretty much been. They haven't fixed that problem of burning through cash. Now when we look at the analysts, we got 44 analyst ratings. 66% are saying it's a buy, 27% are saying it's a hold, 7% are saying it's a sell. We look at the Morningstar, they are saying that international expansion offers attractive markets for adding subscribers. Subscribers, sorry about that. Netflix internal recommendation software and large subscriber base give the company an edge when deciding which content to acquire in future years. Netflix has built a substantial content library that will benefit the firm over the long term. Now, when we look at the haters from Morningstar are saying that the firm continues to burn billions of dollars of cash to create its original content with no end in sight. The level of competition in the US and internationally is increasing and will continue to do so over the near future. Disney will launch its own branded SVOD service in the second half of 2019. The need for increased content and marketing spend outside of the US will limit the rate of margin expansion for the international segment. Now, when we look at the researcher report from Morningstar, what they're saying is that Netflix continues to burn cash with competition looming on the horizon. When the Morningstar rating they're giving it is 1 star, with the economic moat being very narrow, and their fair value, what they're valuing Netflix is at $135. Their uncertainty very high, and the stewardship standard. Now they're saying that it's worth only